Let's look at what Ruchir said last year and whether it actually happened or not. What are the top 10 trends last year? We'll quickly go through them and then review and see did they work out or not, and how seriously should you take them. First of all, the first top trend was global growth will peak in 2018. Let's see what actually happened, Ruchir. Your data shows that global growth in 2018 actually hit 3.75%, and that was a peak, right? So it did come down, but why?
Well, I think that, this has been a sort of really surprising development over the last 12 months, which is the fact that almost every economy in the world, with the exception of the United States, has decelerated. I think there are some structural and some cyclical reasons for it, which that interest rates have been going up across the world. Global trade has been slowing down. There's a lot of uncertainty because of the global trade battles which are going on between US and China, which we'll speak about during the course of the show. And also the fact that you have demographics which are turning against the world, with the large chunk of the world's population which is aging. So I think these factors have come together, and that's why
get personal here.
that in 2018 every economy in the world, with the exception of the United States, showed a deceleration.
Every economy, almost every,
like every major economy.
Exactly. That's amazing.
Yeah.
That is amazing. And that trend is kind of continuing, or?
Yeah, absolutely. So the momentum, and I think that's why markets have been getting quite nervous across the world, that in the last few weeks, that trend has also caught up in the United States, with that economy also now showing signs of slowing down.
Right. So that was the first in your, and you got that one wrong. I mean, we always fluke sometimes. But okay, let's have a look at what was the second in the top 10 trends of 2018. This is what it was. It was going to be a year of boom shakalaka in Europe. Now, what actually happened in Europe?
Well, Europe also disappointed. So, I mean, this is something which caught me by surprise, because in 2017, we were seeing some signs that finally the sick continent, which has suffered 2 recessions in the space of a decade, was breaking out from its long slumber. But unfortunately, even Europe in 2018 disappointed on the downside. And I think that was one of the big surprises as far as I was concerned.
Because it was kind of picking up and then it just didn't
Exactly.
deliver.
It like relapsed. Not relapsed, but it sort of, the momentum faded. Last year.
Right. Now let's have a look at the third of the top 10 trends of 2018. This is last year. You said that there's going to be a lot of indicators that good economics may not be good politics. Now that's contrary to what everybody says. Let's have a look at one example of whether this is true or not. And this is some of the data that Ruchir and his team have unearthed. People with approval ratings were low. All these leaders of 20 major democracies had low ratings when the economy was on a high. And in 2018, approval ratings went up when the economies of these 20 major democracies were low, from 35 to 45. So life is not all about economics. You guys, investors, there's more than economics.
Yeah, no, I've always sort of, felt that. And that's a lesson that you learned from India and taken it global. Because usually we're learning global lessons and seeing how to apply to India. But in India, this connection's been quite sort of tenuous. And I think that's what we're seeing across the world as well, that there are so many influences now that what really leads to leaders being popular is so hard to gauge. And I think that why we saw this bump up in approval ratings is also something which is mystifying. But the basic connection is this, that in 2017, you had a booming global economy, record low approval ratings of leaders.
Amazing. Yeah.
Last year, we had a bit of a relapse in economic growth in many parts of the world, and yet approval ratings ticked up a bit. Also a lot because many new leaders came on to the surface, and those new leaders are enjoying some sort of a honeymoon, you can argue, and some of the very unpopular leaders got booted out.
And you'll be going into a little bit along these lines about 2019, whether this will carry on. That's in the course of the show. Let's have a look at the top trend number 4 of 2018. This is what it looked like, is that everything is a bubble, the everything bubble. Now let's see what exactly you meant by that. Every bubble burst in 2018. Only cash was the winner. That's what you're saying. Oil down 20% last year. Other commodities down 10%. That's another bubble that burst. Global stocks down 8% and cash up 2%. Now again, amazing that you foresaw this, but what was the underlying reason for this?
I think the end of easy money, which is the Federal Reserve is increasing interest rates, which is the global central bank. And the end of easy money, I think, led to a lot of bubbles bursting. And one we haven't shown because it couldn't quite fit onto this graph because the scale was so huge, was the Bitcoin bubble. If you remember at this time last year, there was so much hype about that.
Yes.
That is down more than 70% over the last 12 months. So the end of this easy money era has led to so many assets across the world doing quite poorly. In fact, one fascinating statistic here is that there was not one major stock market in the world which in 2018 generated a positive return in dollar terms. Not one.
Yes.
In terms of all the major stock markets, if you look at them. Yeah, there were some small markets somewhere like Qatar or someone which gives you positive returns. But everywhere in dollar terms, including the US, had negative returns last year.
That is huge in terms of the spread.
Yeah.
Doesn't happen that often.
Exactly. I mean, like a year like this, at least since 2008, we haven't seen something quite as negative as that.
Did oil go down because, and commodities go down because of what you earlier just saw, that the general growth rate had peaked and growth rate was coming down, demand was less,
yes,
expectations were a little pessimistic?
Yes, that was one factor. Like it's always a demand-supply factor.
Yeah, but of course oil maybe they pumped out more as well.
Yeah, that's right, especially from the United States. But in general, I think that the fact that you had a sort of slowdown in global growth, I think is one reason why you had this everything bubble unwinding last year, along with the end of the easy money era.
Right. Now let's look at number 5 in the top 10 trends of last year. This is what Ruchir said at the beginning of the year. You have a peak calm in stock markets. In other words, stock markets in 2017 were very calm. They didn't go up and down, weren't very volatile. And he said that was going to be over. This is what it looks like. The volatility is measured by this 6%, the drop between the high and the low was only 6% in 2017. And man, it came back again, 22% in 2018. Now that's a reflection of what?
Well, this is just for India.
This is for India, yes.
This went down. But this graph is for India, but this trend is universal, that in every stock market around the world, we saw much more volatility. And that sort of reflects greater uncertainty about the future prospects for growth. So 2017 was a very calm year, but if you know anything about markets and the nature of that beast, it is that volatility is is its second name. So I think we saw a comeback of that, but also reflected the fact that you have much greater uncertainty about global growth everywhere. I
mean, India going from 6% volatility to 22%, that's a real amazing indicator, which not many people look at uncertainty.
Right, but the 22% number is more in line with the historical norm. 2017 was so exceptionally low. So I think that's the way I view these numbers.
Okay, but you did spot that it was a
the 2017 was a very exceptionally...
calm before the storm. We all could have told you that. Okay, let's move on to number 6. Item number 6 in Ruchir's top 10 trends of last year. Tech, he says, will be as good as it gets. Let's see what actually happened. Tech stocks plunged. So you had said that they were already too good, and look at the amazing change that actually happened. They plunged by 25% towards the end of 2018. That really did come as a shocker for the rest of the world, but you've been saying that right from, even towards the turn of 17, 18, you said this is just a bit of a bubble, and 25% down?
Yeah, 25% on average, and there are of course many stocks, including some of these Chinese giants, like Tencent, which are down even more than that. Wow. So so it's a year where a lot of the tech stocks really finally the sheen came off. The FANG stocks, as they call them there, the Facebook, Amazon, those kind of stocks. So so a pretty universal decline in tech stocks, which accelerated from about October onwards.
And you think this is a correction which was necessary? They were again out of whack with their true value?
Yeah, that's what we're going to be discussing in our 2019 trends. But yeah,
right. That's why this happened at that time.
Yes, exactly.
Okay. Now let's move on to the next trend of 2018 that Ruchir looked ahead across. He said this is now point number 7. Remember, big dominates like never before. Big size matters.
Right.
So what actually happened on that?
Well, I think that the same trend has sort of continued. It's hard to foresee as to when this is going to end. But the entire point here being that if you look at every sector, and this is true even in India, that the top 3 companies in each sector.
So here, big company, big you mean big companies?
Yeah, big companies.
Dominating
in terms of their market
sector.
share in each sector, whether it's got to do with household consumer goods, passenger vehicles, television. If you look at all these sort of categories, across the world what we are seeing, and even in India, is that the top companies keep gaining more and more market share, almost at the cost of the small and medium-sized companies. And that's a trend that we have still seen play out over the last year or so.
Right. That's in this review of where Ruchir got it right and wrong, you're doing quite well. Were you always a student who got distinctions? No.
Well, the reason we're doing this is because it ended up being okay. But
no. We do it every year.
That's right. We won't do
if it doesn't work out, we just say move on. Okay.
We skip on to the top trend for this year right away.
We do it every year. But so far, like you've got 6 out of 7 spot on. Let's have a look at number 8. Point number 8 in the top trends of 2018. You said India had 3 major concerns. We won't go into graphics and details about that, but quickly, what was it about?
Well, I think that what I was saying was the fact that we were likely to see some deterioration in India's main macroeconomic indicators. I was speaking about the current account deficit. I was speaking about the fiscal deficit, and also what was going to happen to our core inflation rate. And broadly, I think in like 2018, these concerns were ramped up.
Yes.
Now, luckily, at the end of 2018, I think some of these concerns to do with inflation are beginning to ebb. But the big theme in 2018 was that these macroeconomic concerns really came to the fore and was one of the main reasons why the rupee sort of fell quite a bit in 2018, because these concerns were there. And some of these concerns linger as we get into 2019 as well.
And you always wonder with this deterioration, we were so lucky that oil prices came down because that's our largest import. We are huge oil importers and we still couldn't capitalize on that.
Yeah, that's been the story for a long period of time.
Welcome to India.
Exactly. But as we showed that oil prices were down 20% last year.
Wow.
But that did not lead to any fiscal improvement, which you would have naturally expected in other years.
And balance of payments.
Right. Yeah.
Trade balance, it should have made a huge difference. But
no.
And again, that's something you'll be looking into about whether India is taking advantage of the US-China
trade war.
Yes, trade war. Okay, let's move on from number 8, India's 3 concerns, to point number 9 out of 10. Point number 9 is Indian companies are best in class in terms of the returns they give to the economy. Return of investment, return on capital. Did that happen again?
Well, I'd say that last year, as we pointed out, that nothing really worked. So even the average Indian company did quite poorly in terms of like the returns that they gave. The small to mid-sized companies did poorly. The point that I was making here was the fact that if you compare India's companies to other developing countries, Indian companies generally are of better quality when you look at some of the measures that we're talking about in terms of what's their return on equity, what are the earnings growth that they give, how consistently do they deliver that. But 2018 per se was not a great advertisement, I would say, for how well Indian companies do because of the poor returns that the average stock generated in India.
Right. You said the stock market didn't give any return, so...
Yeah. But especially like in dollar terms, as I said.
In dollar terms, especially, especially since the rupee weakened against the dollar.
Right.
Finally, let's look at the last, point number 10 in the top 10 trends of 2018 was kind of fun distraction. It's called peak distraction, and that's distraction that all of us have by our mobile phones, pads, iPads, notes, etc. And how bad that was, and was anything being done about it? Well, Ruchir points out that Apple almost forced to come out with some new digital wellness features just to counter this image of screens being negatively affecting all of us, distracting us from China had a crackdown on children video gaming, and interestingly, Ruchir discovered, because he uses it so much, the word of the year, nomophobia. Nomophobia?
Right.
I know what it is, but tell us.
Well, I think this is like the word of the year, which was chosen on the basis that that the fear that people have of being without their mobile phones for even a very short span of time, and that sort of ended up sort of capturing the zeitgeist, I guess, in terms of, or also, I guess, in a way, sort of mocking this culture that we are in, where to live without any digital device has become so difficult. But the broad point here is this, that there is increased awareness, I think, that there's a law of diminishing returns to the use of technology and of smartphones and other sort of gadgets around you. That it has undoubtedly led to a big productivity boom over the last decade as these things have sprouted, but also the fact that that we've probably hit a tipping point where beyond that, if you use too much of this, it has negative returns for your sort of well-being. And I think there's much greater sort of consciousness now about what should we do to try and limit the amount of time we spend on these devices before it begins to hurt our relationships, it begins to hurt our productivity in general. So I think that is something we're likely to see much more, and therefore digital detox is the new phrase or the new buzzword rather for many people now.
But I mean, you do also do a lot of constructive work. You read books on it, you listen to audio books, you read all the latest news on it, especially on NDTV.com. I had to plug that. So it's a distraction, but also there are a lot of positives.
No, that's what I said. There's a curve to these things, which is that like it's an undoubted positive up to a point, but too much use of it. Like in India, I think the average person who has a smartphone uses it for more than 4 hours, or like 4 to 5 hours. Data is so cheap that they're using it more and more that you begin to see sort of declining returns to your productivity. So I think it's the usual curve.
Well, Ruchir, that's the full list that you forecast last year, and being a very generous and not very strict teacher, I would give you 9 out of 10, 90%. Next time we would expect better. But well done.